What is going on, everybody, and welcome to another weekly update. What I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do also provide a technical analysis on Sundays, typically to get you prepared for entries and exits. And I do also provide a daily pulse on the market on X at Hemi137. So before we get started, remember to go ahead and hit the like button, and let's go ahead and roll out. Now, this past week, there hasn't been a ton of information, but there's been some huge developments currently going on. Something I've stated as of right now, we're kind of getting that lull period, especially because of the fact that not this particular week, but aside from the election, we are pretty much waiting for a couple things to pan out. We're ultimately focused on what is going on with essentially the rates on, I believe it's the 18th of September. So we roughly have just under about 2 weeks to really determine what is going on with the rates. But before we get into all that, let's go ahead and take a look at what's recapped of this past week. And there's been some big news, just like I said. The BLS revised 12-month job growth lower by 818,000 jobs. This is something I've been talking about for a while. Now, this is just preliminary. This isn't the actual official results yet. That's why I didn't have that big of an impact on the market. But it reinforces the fact that the Fed have to start doing something now. A lot of Fed members were talking this week as well, and they started talking about how this week was Jackson Hole, by the way. So I do apologize for that, because I know last weekend I was talking about how Jackson Hole was next week, but it was actually Thursday, Friday, and Saturday. But that being said, Friday was the bigger day. And then on Tuesday, I believe it was, so just before Jackson Hole really started kicking off, we got the revisions on the BLS that came out, and something we've talked about multiple times. There's been revisions on jobs, and then this came out about the official revisions, and it's been essentially this whole strong and resilient that we're growing like crazy was a complete lie, because that is not what it is. And we see this all the time, and that's why I try to let people know these things ahead of time. Again, they're not going to have direct impact on the market till it becomes quote unquote official. But again, they have the power to schedule these things and ultimately understand when it gets revised and we get official numbers, it is going to be a time when we are going to be in probably some really bad pain. And I talked about this. Whoever sits in office in February, when our normal downtime is, maybe we get those official numbers then. And we get the debt ceiling at that point, which would lead into a huge cascading amount of fear going potentially into next year. Now, that's not saying that if we can't do anything by now. Again, I'm going to point this out, but in 2007, this exact scenario happened. You had Jackson Hole and you started cutting, and then you had the massive panic following the next year in 2008 that led to the crash. Now, at this point, again, the job growth, the lies, the revisions is something I talk about because it's important. You need to know what the underlying sentiment is. You take advantage until you wait for the next event. What's the next event? Does the next event provide you any more information on if anything's going to be officially released? No. Okay, the market's going to continue to go up, right? These are things you need to understand. Now, there is some black swans, but it is very rare you actually get black swans, even though they treat a lot of these like black swans, but you can see them coming, majority of them, a mile away. And you can essentially understand, well, okay, well, what's the next event? Is it feeding into that narrative or not? And I always talk about the utopic perspective that keeps everybody controlled and calm. And then you have the reality of the situation, which is at this point is very bad at this point. So we just had the SOM rule. Now that we got this revisions of these jobs, we had the SOM rule officially, quote unquote, come out on the last non-farms. And that's essentially over a 3-month span, the ratio and the amount of jobs increases, essentially puts us at 4.3. Now with these revisions, it shows you have been in a recession for a long time. And by definition, if you have been in a recession for longer than 6 months, you have been in you are essentially in a depression. But this is something I want to emphasize. Now that we're quote unquote making this official, there will be a turning point. And when the market actually officially comes out with this stuff, we priced in a recession. The market, which will only probably take about, it could take about a month, 2 months, maybe even 3 months. And then we correct. The market was good about making that correction. And then essentially we have a massive run in the market first. And then you get a lagging effect in housing and everything else, because you have to understand, just because they start cutting doesn't mean you get massive amount of demand coming in. You have to understand where the consumer is. The consumer right now is in very bad state. Obviously, with the jobs, people don't have work. People have essentially blown all their savings. They built up tons of credit card debt, delinquencies. They're moving in with family members, skipping meals. Things are very bad. You are in a depression, like state, whether you want to believe that or not. When we get the official numbers, it will probably reflect that. And you have to understand that we don't even have the full Q2 numbers for that either, for all those revisions. So, with that being said, again, this is what I talked about last year. We were in a recession last year. The only reason, again, we got pushed off till this year, much like the Evergrande and Country Garden that occurred in China, they delayed the results. They delayed that by getting rid of the debt ceiling and spending massively over the past year. You have to understand that is what's being propped up. It's not just some random piece of information just to try to throw you off and become a bear. What I'm saying is you have been at this point. And so we are getting closer to an end game, but you have to understand it will get worse before it gets better, because they haven't even started cutting rates. You even had Fed members come out this week saying they should have cut in July. And understand that's going to be a very delayed reaction, and you're going to have to see panic from the Fed when they start panic cutting larger than 25 points. Now, that being said, we had Jackson Hole this week. We had Fed Powell come out, and he didn't really say much. He was pretty much the same Powell, aside from the fact he said the time has come for the Fed policy to adjust. Everybody said, well, it's got to be September. We don't know if it's going to be September. We're assuming it is because you are right around from the election. And a lot of people are weighing it's going to be just a 25-point basis move, which I've said it's not going to do anything. It's just a political move. Really, if they're not concerned about inflation, which they would be if they're only doing 25-point basis move, or on the same token, they're concerned about not only inflation, but what things really look like moving forward. And again, you're not going to really know what's going to happen moving forward because of the fact that you're not going to go to a massive bond move like I've talked about until they start cutting at 50, 100 points. A lot of people are already pointing to the Fed saying you need to have a 50 or 100 points cuts, because they're going to get to that point. They're going to be reactionary, and it takes a very lagged time. If you've seen, we rapidly increased rates last year until October before we paused. Understand it's taken a full year to really see the dramatic impact of what that looks like. And now with all these revisions, you're seeing what has actually been happening. I talked about how delayed this reaction is when you're looking at these particular things. So, being said, September 25-point basis move. It gives Powell and the Fed potentially more data sets, as I believe you will get the core. You'll get another core beforehand, and that's going to be important. And we just had the core inflation report in the last one, and it was 2.9, and everybody was super ecstatic about that. You have to understand they're doing year over year. So your new inflation rate is not 2% anymore. Your new inflation rate is 3%, because that's just year over year. They're not taking into account how food products have essentially skyrocketed up 8 to 9 to 14 to 18%. That's not including insurance, which has gone up like 15% in a lot of different states. And a lot of other, HOA fees and all these other things for people that own homes. Even rent at this point, the median rent in the U.S. has gone up by 50. I believe it's roughly around 55%. So these are what has taken the cost. This is why you're seeing essentially disinflation and a lot of other aspects. And that's what essentially the administration, everybody's trying to point to. Oh, well, you're seeing disinflation, blah, blah, blah. Yeah, of course you will, because people don't have extra cash. And we've seen that in the earnings reflected. Fast food, right? They're trying to push that cost off to everybody because one, again, they're forced to have to increase wages, which they can't do. So they've had to shut down multiple locations. You have to understand a lot of these companies still have to remain profitable. So the fact that the administration is pointing to them as being the bad guy, yes, to an extent they are, but on the same token, it is not all their fault. You have to understand in the inflation that's currently going on is mainly because of the pandemic and the shortages that we had, and everybody was locked down for so long, caused massive inflation. And then on top of that, you also had the massive amount of spending that was going on during that time, which has all been siphoned out of the market. And so people are left with nothing. And so the thought and the idea that, okay, we're going to get a 25-point basis move, all this demand is going to come running in. It's not going to. The banks are reducing risk, closing branches, right? You have to understand that not only are they closing branches to reduce risk, they're not going to want to lend to anybody because they are at this point just trying to survive. In the same scenario, all your consumers are in a very unhealthy state as well. They've burned through all their savings. A lot of them are burning through 401ks, taking extra loans out, which, these rates on credit card and all these delinquencies, these delinquency rates on credit cards are like historically like around 25%, like historically high interest rates right now. And people are having to pay all this extra money and they don't have the extra money. And so it's starting to ding their credit score. So what makes you think that they're going to come flooding back in to start being able to purchase things? They won't. And it's going to be a slow ease for the Fed to try to see, because they want quarterly data on what's actually about ready to happen on when things start to flip, but good. And so with that being said, if we cut next month, which I'm sure that we will probably do some sort of cutting, 25 points. I just want it to be known that it's not guaranteed that it's going to happen. They just said they need to pivot, is what they've said. But again, a 25-point basis move isn't going to do anything. When they start panic cutting, when they start doing 50, 100 points, then it's a problem. Just like when they increase rates. They did it massively. You're doing 75 points here, 75 points here, 75 points here, right? You have to understand when they start cutting that same way is when they're forcing, like we've seen in China. We talked about how this was going to play out overseas before it happened here, right? You have to understand China got to a point to where they got to massive disinflation. And so they were cutting rates like crazy. There was no demand coming back. And so they start stimulating the economy and still no demand is coming back. So you can't assume that just because the money printer comes on, that the demand is just going to be right there, right? It's going to take some time, but you have to understand that it's not going to take forever. It can take 2 to 3 months, right? You have to understand price in a recession, and then the market's going to recover at some point, right? The stock market will adjust that quickly. The rest of the market will not. And so these lagging effects, this is why you're going to start seeing more and more people, even though they may turn on the money printer, is that people are starting to sell homes because, again, they can't get jobs or whatever the case is, because it's a very lagged effect. You have to wait for the maturity of the loans to be able to, for companies to be willing to go back out there. Companies have to build confidence on the same token. So it's going to take a little bit of time. It's not going to take years upon years. We don't know just yet, but you are in a depression at this point, right? Especially with the revisions. They're more, and again, official numbers are probably well over 1 million. But with that being said, you are starting to see how this is playing out. So every 10 years, you have these massive corrections where it resets prices for everything because everything is just too high, to try to increase wages, to put price controls in. These things are not what you want. Look what happened to UPS. They increased wages, and what happened? They had to fire tons of people. It was a huge problem because they can't afford it. They have to still remain profitable. If they can't remain profitable, they can't stay in business. You want to fix prices, well, then nobody can undercut the other person. Yes, some people are going to price gouge, but you can undercut and take over the whole, essentially, the whole sector by undercutting your competitor. And if you're going to have it fixed and all this is what it is, then some people costs to maintain that are too high for them to be able to stay in the game. So you're going to lose a lot of businesses. So it actually does more harm than it actually does helping. So we've seen this in many other countries, communistic countries, right? To try to price fixed control does not work. And so with that being said, you're leading into all this, and on top of all this, you have again the election and the massive amount of fraud and everything that's going on right now. And so again, it doesn't matter what party you're associated with. I don't believe in parties. I just don't like the banking system, and understand this is what the banking system does. The banking system ultimately controls all this. The politics are just politics, and you can debate about it, whatever you. It's just a distraction, in my opinion, is what it is to what is actually going on. The underlying issue is again being the banks. And so again, with that being said, whoever's sitting in office in February is going to get handed some real nasty facts about what actually has been going on. If it doesn't collapse beforehand, it will collapse in February or roughly around that time, because February, March is roughly around that correction period before the market really starts to recover. And again, if you're on average trying to price in a 42% recession, which again, you're dealing with a lot of historical data, it might even be more than that. We don't know. Don't assume it will, because then you can miss out. But you should have your list like I've been talking about. You should be prepared. You should look at all your top cryptos. You should look at all your top stocks that that are going to make it. You don't want to be messing with unknown names, because they may not make it out. The next 6 months are going to be absolutely brutal, right? And so with that being said, again, not a ton going on, but a lot of repercussions about what is happening for what's gone on over the past week, and how much the September meeting is building up more and more and more going into the end of the year. Because again, you do have a rally at the end of the year typically as well. And if it continues to stall and do bad, that's going to be a huge issue. And so this week we do have GDP revision numbers. I think it's the second revision numbers, which will, if more stuff starts pointing to recession, that could feed into it. Some of these off things are starting to hold more weight, especially now that we're kind of seeing the job revisions being revised. Friday we have core PCE. That will again matter. Again, the Fed are still watching that, despite everybody thinking that inflation is gone. Inflation is not gone, but your new average for inflation is 3% and not 2%. So again, things will start to correct, and we'll have to go from there. Again, it's not going to be just the easy blow it off and that's it type of situation. So this is the big meeting here for monetary policy, is the 18th. We also get projections of when they're going to do their cuts. That really doesn't matter. We want to see what they're actually cutting. If they cut, people are expecting 3 cuts at the end of the year. We get September, November, and December. We'll see if that's true. Again, 1 cut isn't going to do it. 25 points isn't going to do anything, but they want to see if it affects any kind of inflation. Again, you're going to need a full quarter. So they might just do 1 cut. They might just be doing 25-point basis cuts to the end of the year. Could be a possibility. And then in the new year, they can see what inflation looks like. That'll give them a full quarter in the beginning of the year on how they need to adjust, if they need to pause there, or if they need to cut more going into the new year, when, again, you get the debt ceiling, you get actual official numbers. Everything is lining up until that first quarter of next year being a really bad quarter if it doesn't happen before then. Like I said, we've been walking on eggshells, but you're still allowed to keep spending, and they've been spending trillions upon trillions of dollars without a blink of an eye, because right now there's no debt ceiling, so they can do whatever they want to keep the market propped up. So core inflation, again, this comes in right before September 18th, so that will be important. Obviously, we're going to review earnings. Is still very, very big this week. We do have a big Nvda. The one last earnings we've really been waiting for is this week. So that will have a huge impact moving forward. So again, you're having some really, really big events going right into the end of the year. If we don't fail by September, October, then we can assume that the rest of the year we should be good. And then going into next year, when we get all this information, the new potentially inflation, we'll be able to see what inflation is at when we start cutting. Hopefully we'll see some sort of adjustment in inflation by that time. And then the Fed will be able to dictate if they can continue to cut or if inflation starts rising. Because if inflation starts rising again, that is going to be a problem. And then this week, we do have a little bit more priced in SPX. That's it's not normal. Typically, we have roughly around like the 50-60 is about not expecting anything, to about this is, yeah, we are kind of expecting that Nvda might do something this week, because it holds a lot of weight, because it's essentially what's driven up the market over the past couple months. Tesla is up a little higher. It's been a little bit more volatile, and then about the same for Boeing and for JP Morgan. So again, this is kind of the last big week we're really looking at here. For the rest, the earnings will continue to go on. So just be mindful of that. But this is the last real one I am watching until the next earnings cycle starts again. So just keep that in mind. But some really big ones, obviously, this week. The biggest one you need to be paying attention to is Wednesday after close is Nvda. That one is going to hold a lot of weight. There's been delays in ships. If they report anything bad, that is going to take down the market. Your essentially tech will be done for now. Although I do believe that sentiment with AI and what it can do and the possibilities, but you have to understand that's the way the market works. You have, again, 3 to 5 strong companies that actually represent whatever that sentiment is very well. And then everybody else is just trying to jump on the bandwagon, and it's all BS really at that point. So that will be a very big earnings. You got CloudStrike, especially with all the that big hiccup they had just about a month ago or so. So that will be extremely important. Salesforce will be a big one. Affirm will be very big as buy now, pay later. Again, none of that data is being reflected on credit scores, and people are going heavily into this. So they do extremely well. That also shows you what is going on because they can borrow all this money and then they don't get dinged for it. And it's not going to show on our credit report, so you don't see all the delinquencies and everything else. But this has gotten very, very popular because of everything that's going on. So that will be a huge earnings to be watching moving forward. Abercrombie and Finch, I believe, had some crazy good earnings over the past couple things. Understand when you are in a depression, people buy clothes. That's another big thing too. So it'd be interesting to watch how some of these clothing departments do. And you have some of these other ones that might be okay. Again, nothing that's going to really move anything. Dale, Dollar Store, Best Buy. Actually, I think it was American Eagle and not Abercrombie. I get the two confused. It might be one of those two, but that would be worth at least watching, kind of see where the pulse of where people are at. Despite everything that's going on and you're being in a potential depression, people are, you have to understand people are what they call chaos spending and essentially are doom spending. And so essentially they feel like they don't care, that maybe the whole system will go down, that they're just spend to spend, and that it is what it is. So something you have to be very mindful of and understand. This is what I've been talking about, and understand, try to learn as much as you can from this cycle because it occurs every 10 years, right? And understand how to take advantage of it to make sure that at this point that you're not overextending yourself, that you're trying to take advantage and investing because this is the time to start doing it. Have that list ready if we start correcting. Again, it's not really going to take a big impact. It's going to take a big event when the Fed really start cutting rates because they're essentially reactionary and they're scared of what's going on. They're going to have some sort of sentiment tied to that, and then understand where that goes from there. So with all that being said, again, thank you for watching and for listening. Again, remember to subscribe and like the video. Ultimately, again, I will do technical video for tomorrow as well for the week. So get prepared for that. We got a big week on deck, again, especially with Nvidia earnings, with all the news that's been coming out. Not a ton of news, but some really, really impactful news. We do have PCE on Friday. Might have even more of an impact. Again, if inflation starts to rise up, you can't be just lowering rates with inflation rising up. And that's the biggest concern, that if we start cutting, will inflation start to rise again. So with all that being said, have a good one, and I'll see you guys later.